Welcome to High Rock Capital Private Client Services. My name is Scott Tomlinson, and I am one of the two managing partners at High Rock. And I'm going to walk you through an introduction to High Rock and a few of the key concepts that make our private client business unique. High Rock was originally founded by our other managing partner, Paul Tepsich, in 2010 to manage 4 funds for Scotiabank. And High Rock is registered with the Ontario, BC, Alberta, and Saskatchewan Securities Commissions. I joined Paul over a year ago to help build our private client business, and we're excited to have our unique business model already making an impact. Our clients are coming to us because they trust in our patient, no-nonsense approach to low-cost investing and wealth management. We know that managing a family's wealth is about 3 main things, and we strive each and every day to do all 3 extremely well. Why High Rock? Well, we started the private client division as a vehicle for investing our own money and invited those who have a similar investing philosophy to join us. Our money is in the exact same models as our clients, so we have a vested interest in protecting our capital and yours and finding the best risk-adjusted returns to get the appropriate growth. We are obsessed with providing the optimal in client service with open and regular communication while upholding the highest standard of fiduciary duty, and we are at all times available to show you all of your costs, both our fee and any embedded ETF management expenses. Our team has a combined experience of over 70 years and the highest levels of education in the industry. More on that in just a moment. Though it is not required, but because we want our clients to be certain that we are doing what we say we are doing, we have an independent review committee that monitors our portfolios to ensure that there is no conflict of interest. And we are the only portfolio management company in the country to managing money on this type of platform to have one. Our team each have the highest level of accreditation available in the investment industry. We all offer complementary skill sets to bring you the best possible combination of assessing your wealth needs and goals and developing the appropriate strategies to achieve them. Managing your wealth, your risk, and your financial future. As I mentioned earlier, our resumes are deep with experience. Trading billions of dollars in securities with various banks and investment dealers has taught us a great deal about the management of risk. Not many investment advisors have this background. At High Rock, you start with a wealth forecast prepared by our certified financial planner professional that will identify your goals and allow us to tailor a long-term strategy to your specific needs. This is followed by a portfolio strategy that is executed with disciplined, active, and tactical portfolio management, which you will likely not get with many advisors. We also have my almost daily blog and our weekly webinar to keep you current on our thinking, quarterly reports, semi-annual reviews, and as much interaction with the portfolio managers as you wish. Very few fund managers, if any, will talk directly to clients. Our private client division was established to take advantage of some of the synergies that come with the funds that we manage for Scotiabank with over $100 million in assets. We are not stockbrokers, investment advisors, financial advisors, or salesmen who farm their clients' money out to other portfolio managers like High Rock. We are a portfolio management company who has a clear understanding of wealth management. Structure allows us to pass on our lower costs to you. Importantly, because all of us at High Rock have our own money invested in the same models as all of our clients, whatever we do for all of us. Our interests are aligned with yours, so there is no conflict of interest. Our fees are simple and transparent, and we fully disclose any hidden or embedded fees. And that is something that may not be the case with most advisors. In fact, we can keep our costs down because we do not outsource portfolio management as many advisors do. In a low return environment, it is really important to pay attention to the costs of investing. Fees do truly matter. If you look at the impact of fees over time, it can be astounding. Every year, you need to have at least 1% better performance just to justify the fees. And more importantly, you need to ask yourself what you are paying for. Over a long period of time, the additional costs can compound and significantly impact your outcome. Over 10 years, on a $1 million portfolio, you are paying your advisor an additional $200,000 if you are in the standard advisor model, $700,000 over 20 years, and more than $1.5 million over 30 years. Now that is a lot. Our discipline is in our strict adherence to your goals-oriented investing. Our structured models, protecting your capital, regular rebalancing, in-depth research, fiduciary responsibility, and a very high level of client service, which includes ongoing monitoring and a review with you of your wealth forecast to determine if we are meeting our targets. It is easy for an investment advisor or portfolio manager to get you fully invested after you sign up with them. They sell the securities that you had and put you into investments that they want you to have, and they do it immediately at whatever prices are available at that moment in time. That is easy work for an advisor. It is a great deal more work to pick the right purchase points. Sometimes it may require patience, some explanation. In fact, some assets may take months and even years to get into a portfolio. This is where our experience becomes crucial. And as a result, risk management becomes very important because we must be vigilant not to put our clients' money at greater risk in order to chase higher returns in the short term, but to take a long-term view to make sure that clients get invested at the appropriate time. Part of the discipline that we bring to the table is in picking the appropriate price points for buying new assets. This is part of the value that Highrock adds to our client portfolios. There are many risks that we have to focus on an ongoing basis. The goal in managing all of these risks is to reduce overall volatility in our models and our portfolios. We call this achieving the best possible risk-adjusted returns. Not understanding all the risks in any given security can lead to losses, so we do our research and use our experience to understand and mitigate unwanted risks. Our ongoing efforts for the management of your portfolio strategy to find the best possible returns while simultaneously taking the least amount of risk in doing so. Naturally, this is done in the context of each of our and our clients' specific goals, tolerance for risk, and time horizon, as we determine in your wealth forecast. Our research shows that a globally diversified and balanced 60% equity, 40% fixed income model can significantly reduce risk while still achieving the best risk-adjusted returns. This is what we would consider to be the optimal portfolio. Rebalancing on a regular basis is crucial. Different asset classes will outperform or underperform at different times in a market cycle. Selling those outperforming assets and buying underperforming assets will continually add value and return. Now, underperforming assets will eventually return to better performance, while outperforming assets will ultimately underperform, and this is how profitability is realized and the new cash reinvested. At Highrock, we have 3 models with which we can create a balanced and diversified portfolio: a fixed income model, a global equity model, and as well we have a model that focuses on Canadian small to mid-sized companies with which we have a great deal of familiarity and deep levels of research. This is an active or tactical model intended to obtain better than average growth by seeking out companies that we believe are trading at prices well below their value. We use these models to create portfolio strategies that are in keeping with your desired goals, risk tolerance, and time horizon as is determined by your wealth forecast. Based on your wealth forecast, we will collaborate with you to create any combination of our 3 models to match your portfolio strategy needs of balance and diversification. For example, my strategy of 60% equity and 40% fixed income is built with 50% of our global equity model, 10% of our Canadian tactical model, as well as 40% of our fixed income model. On the other hand, Paul's portfolio is made up of 25% global equity, 25% Canadian tactical, and 50% fixed income. Now, depending on your needs, a more conservative portfolio might consist of 35% global equity, 5% tactical, and 60% fixed income. Your accounts are held under your name at Raymond James, one of the largest wealth management companies in North America, who provides custodial and back office services for HighRock clients. They are your accounts and your securities. You just give us permission to make the appropriate trades in them. Raymond James is a member of the Canadian Investor Protection Fund, which covers customers of members who have suffered or may suffer financial loss as a result of the insolvency of a member. So your accounts are protected for up to $1 million per account. If you would like to learn more about HighRock Private Client and discuss any of this in more detail, please feel free to contact any of us by phone or email using this contact information. Thanks for taking the time to listen in. I hope that we hear from you soon.